Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the S&P 500. The date is May 3rd, 2020. It's 11:20 a.m. Eastern Standard Time. If you want to stay up to date with all of our indices, commodities, currency pair, and cryptocurrency pair videos, make sure you click that red subscribe button. Okay, so I'm looking at the weekly chart here for the S&P 500. So long-term bullish, right? Multi-year long-term, yes. Stock market will return, yes. Will return to previous highs and previous glories. But short-term, I don't think it's going to happen soon. So my short-term is bearish. Long-term bullish, short-term bearish. So looking at this multi-week trend, we see price moving away, finding significant support at 2,400, which is a proven point from back in the end of 2018, as well as a few times in 2017. But now we see price has hit some resistance. So if we could zoom up, we see last week we were talking about this bearish candle and what needed to happen next to make things go bullish. So prices did soar up, but then the sell-off ensued, and the body of the candle closed below the 2,900 mark. So now this forces this indices average into an bullish ascending price wedge, which ultimately is good. It's a long-term bull play, which will give people lots of time to buy, but it's unfortunate in the sense of how long this will take to play out potentially. If each of these weeks, so each of these weekly candles, if we stay in this range, it could take up to 2023 to see a bullish breakout. So that's a few years. Here's the good news. If you are building your portfolio, this could be a great multi-year stretch to do so. And then we see the bullish breakout on the other side of this. It's almost like a tabletop. We can see here that this price point, right, the 2,900 mark, this was tested early January 18. Fall of 18, prices did manage to climb through it and then were rejected. Once again it happened. Then it used as support again, short term, then prices broke below it. Recently tested, couldn't come through, that was the week before. Last week, pierced through, then a sell-off ensued. So, great chance, this is exactly what we're going to see happen. Averages move into this sideways type approach. Now we see the moving average here, the fast 20 weekly moving average. And we've been talking about how price needs to catch up to the moving average. So it did essentially that last week where it came up and almost touched it, but then was rejected. So at this point, the only thing that would make me bullish short term is if the index average popped above 2,900. That's what I'd have to be looking for. So what would need to happen, let's go ahead and look at our daily. We are moving above the fast daily moving average. That's a good sign. So that's a bullish signal, if you will. But as you can see, at a closer look at this resistance level, exactly what happened. Prices went through, sell-off happened, more selling, now it's below that line. So tons of selling orders pushed it back down below. Now, if we were to draw a parallel trend line to this overall ascending trend line, let's go ahead and put this here, and we put this here. Now prices could potentially stay in this 2,700 mark all the way through 2,900 and would still retain that bullish fashion, but really there isn't much support here. So this is a little bit less probable than the long-term probable play. So if we look at our 4-hour, let me go down to my 4-hour. Okay, well, so this week, look for a break above 2,900 to go bullish. If it stays above 2,800 but it goes a little further, the bullish scenario is stronger. All right, everyone, have a great week. I hope you make lots of cash.